Futures are positive following a powerful rally in the markets yesterday. As Q1 winds down, the markets are seeing their best performance in over a decade. Commodities finally join the rally. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you Morning Call. So of course, stocks closed yesterday at new yearly highs. Stocks are on track to post their best quarter since 1998. Being cautious in this market has not ultimately paid off, Scott. So is it at all time to take some profits? Should we get cautious at all at these levels?
I think it all depends on your time frame. And what this market has actually proved is that you can make money on any time frame. If you've had a plan and just say in the last 10 years you've been putting money in a 401k, you're actually probably net up. If you're putting money in a 529 for your kids' college, it could actually help you pay for it. If you're a momentum trader like myself, there's been an unbelievable trend that started in October, that got refueled in December, and gave you a lot of opportunities just to stay with the trend, owning multiple positions. And then it also shows you that if you're a stock picker, people say you couldn't be a stock picker. Meanwhile, there's a batch of stocks that have made historic highs that if you pick the great companies out there, not only could you make you money holding a long term, you could actually, some people actually got rich doing it. So there's a lot of opportunity here, and I still see a lot of naysayers. I still see a lot of people approaching the market with a glass half full or half empty, instead of half full. And I think it's time to approach it with a positive outlook, because I do still think the next 3 years are going to be much better than the last 3.
And of course, the first quarter of 2012 comes to an end this Friday. Talking about leading sectors, tech, financials, retail, they have led the market. Scott, will we see any sector rotation by the end of this week?
Well, as a trader and a short-term momentum watcher, that's what I'm going to look to see, because we saw a strong day yesterday. Typically, they push them up a little bit closer to the quarter end, but then you're not sure whether or not they take profits in the strongest names if they book them, if money then rotates to the weaker sectors for second quarter performance versus first, because each quarter is different. Everyone has its own character. But for right now, if you look at the market in the chart here of the S&P, you will see a nice methodical, actually 2 trends. Here's the gradual trend that never got tested. Here is the more accelerated / momentum trend that got tested a few weeks back, and it held this 1440. If you remember that, it held right through the 20-day and bounced really strong. Then it took out these highs here, giving you a powerful move. You had a little bit of a retracement last week right into the 10 and 20-day again before going. So for me, until I see this trend change, until I see leaders acting faulty, until I see more than just one distribution day in the course of a few weeks, I'm going to try and stay with the trend and not try and pick a top.
Investors have really been able to cash in on investment quality stocks, taking stocks like Visa and MasterCard hitting 52-week highs on Monday. Are these stocks that you're continuing to buy on dips?
I'm not long Visa, MasterCard now, but as a macro investor, I've talked about this being one of the few that could be in your portfolio. Always showing relative strength, above the moving averages, outperforming. So as a stock picker, like I mentioned before, if you follow these rules, you could actually stay with this. And there were some trades there that I do trade from time to time. Like if you look at MasterCard right now, take a look at this chart, you will see yesterday it pushed into all-time highs. You saw a nice little base here, consolidating this last previous move, going sideways on Friday. It woke up saying if you're a momentum trader, buy some, get ready for a new move high trade, and that's what you had right here. Now, if you're an investor who said, oh, I think MasterCard has a bright future after coming public, this is where it came public back in 2006, and now look where it is. Huge winner. So as a market timer, you could have made money, and as an investor, you could have made money.
And then talking another leading stock this year, Under Armour. Shares of Under Armour have just taken off in 2012. They've rallied 35% this year. So there's talk that there's plenty of room for growth left in this stock. At what levels would you be buying it?
Well, right now it's trying to push into 52-week highs again, and as you can see, you had MasterCard, a credit issuer, and now you have a retail stock. So it's showing you that it's not just one sector making historic highs. So if you look here at Under Armour, you will see there was a few places to buy. This was the last time when it cleared this 85, and now it went higher, this little small reversal. If you remember, as a market timer, I actually caught this as a little short. So it shows you how on a micro basis you could still make a little bit of money there. But then it held the 10-day, and now it's looking to go through highs again. I still think there's room here. You want to look at it as an investor, look at the monthly. Very similar to MasterCard, right? Came public a year before, and now look at it at historic highs. So there is a trend of, if you could find new issues that have been public for a few years with small floats and high growth in front of it, you could be a stock picker and then also trade it along the way for cash flow.
And it's not, of course, been just those sectors. It's also, of course, been tech, and no one bigger in tech than Apple. It's just been reigning supreme this year. It's been the focus of investors and skyrocketing shares all year. What does your game plan with Apple continue to be?
For me, I'm trading it, and sometimes I'm long it for a few days, sometimes I'm long it for a day and a half. It all depends on the chart patterns. And typically every sale in Apple is a bad sale. And early this year, my target was 700 and change, but I'm not going to hold it the whole time. I'm going to trade it. As you can see by the chart, it's been following the 10 and 20-day moving average. So if you go here, this was the last time I really gave a good macro strategy, because some people don't hold through earnings. This was your earnings gap, okay, and it held. And on this green day, I remember telling people I'm getting long Apple because it held the earnings gap, and let's see what happens. And PS, since then, it's gone on a historic run. And it's been riding this 10-day moving average. So as a trader, every time it hit it, you could have been buying it, except for like maybe right here, and that was for a half a day. So now it woke up again at this high-level macro wedge. I did get long yesterday. I think if it takes out this 609 and change, I'll add for some momentum, and then I'll trail it and see how long I could stay. But if you look at the monthly chart as an investor, this too, look how unbelievable it's been. You could have made a ton of money in this stock, seeing the product line, seeing the innovation, seeing the popularity, and there it is. So there, for the best company in America, you could have seen it early as an investor and as a trader. So just start opening your eyes, and again, look at this market with opportunity and don't get dragged down by the misery of people who have lost money and don't know how to approach it.
And just one last touch on tech, IBM, you've said this could be a stock that's been good for investors with different pivot entries. So at what levels are you watching for entry points for IBM?
IBM has given traders a few, and this actually one has been a little bit harder from a trading standpoint. For a few weeks ago, I was trying to buy it around 196 for that move through 200, and it did happen, but it didn't happen in like a sexy, sizzling way. But it's only IBM. It's been sexy and sizzling for a decade, while other mega caps were out of vogue. So as an investor, you could have made money, but as a trader, you look here and you see IBM. You'll see that there were a few entries. This was one of them. Right? Here is tight range. We were waiting for it to break above. This was the first time I think I got involved in a tier 2. Then it went up, consolidated again. This was your next buy price, and now it's also on its way into new highs. So if you're an investor just holding it, congratulations. As a trader, it's been all okay. And for a monthly chart, look how different this has been since the mega caps. Once it cleared this 1999 high, which was right around here, look at the move that IBM had. So if you knew this pivot, if you knew this long 10-year base would be a breakout area, you could have gotten into 140 and you'd be up a lot more than just taking micro trades like I try and do along the way.
Well, it's not all about cashing in on stocks that are at all-time highs. You can also make money by timing trades. So we're going to dive into that right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
We're back, and we're talking stocks that have been timing trades. And I think no better example than this, but Netflix. This stock we saw take off in the first half of the year and then get demolished in the second half of last year. So it's been all about timing, Scott. So what's been the key to timing this one?
Well, you have to follow trends. And sometimes you can't just sit and hold something because the trend does change, like you saw in a lot of the mega caps back in the 90s when Dell, Intel, Microsoft, sometimes all good stocks come to an end, and you could see it in the charts. And with Netflix, this was a key example. Last year, you had a lot of short sellers out there, a lot of people talking it down, and it wouldn't go down. But then finally, if you were riding this trend as an investor, you had two clues to get out, which you could have gotten out, saved yourself a lot of pain, and then actually re-entered this year. So if you look at the chart, let me show you what you could have seen. All right, here is the uptrend that started well back in 2010. And every time it touched it, it bounced off it. Then finally, you had a little bit of a red dog reversal here. You guys know what that means. That's a small take notice sell signal. It pushed through the highs and then closed off the highs. So this could have been sell signal number one. If you missed it, fine. Then it closed below this trend line and couldn't get back above. That's sell signal number two. But if you missed that, okay. And then finally, when it did break this 210 area, you had to get out of the way. You had too many sell signals, to actually absorb here, and then it just collapsed. But then you fast forward into this year when a lot of us came in flat and people weren't sure what to expect. Another man's, trash is another one's treasure. And right here, if you were out of it, okay, which you could have been, this is where you could have re-entered, okay, right around 75. You had to move from 75 to almost 100, consolidated nice earnings. And then even if you missed this, last week we talked about entries again. 111 was the entry when it crossed this descending channel, and you had a nice 10-point move since then. So I'd say as of right now, it's a little bit more difficult, but if they want to continue this into quarter end, your next pivot here will be right around this area, which I believe this is 120. 348. It gets above that, it could be in motion to go back and test these highs that we put in around 130. But I think the easy part of this trade is out of the way. But this has been more of a market timing vehicle than just to sit, close your eyes, and get paid like you saw in some of the other ones.
Now, sticking with this sector, Amazon. This was one that you, Scott, were avoiding for some time. We did see it pipe up last week. How should investors be approaching this stock?
Well, this shows you also, as an investor, depending on how far you go back, you're probably still in the money. But lately, or in the last 6 months, it showed you relative weakness. Gave you two bad earnings reports, so you were put in the penalty box. But as a micro market timer, because that's what we do, we trade for cash flow, there was a minor wedge being put in this lower level. So if you remember on my price point sheet, we showed you this pattern here. If you go to the pattern on Amazon, you'll see, here it is right there. This is that lower wedge, right? Here's a high, lower high, lower high. It finally broke that trend. So right around 186, 187, I remember it happened at lunchtime. Mark was all over it. This was your actionable buy. This was your cash flow buy. And then what did it do? It followed another rule. It held the top third of this wide range bar, saying that there's still demand there and it can continue. Then it started trading above this flag, and then that gave you a secondary move. And now I do think it has a little room to 210-ish. But I would just be careful here because it just had a nice move. But just to show you how it was relatively weak, and who knows, maybe it still goes lower because look where the high is versus the other stocks. But if you want to time it for cash flow, here's your cash flow trade. And I would say at this particular point, I would be in a lot less because it still has a lot to prove.
All right, well, when it comes to market timers in the financials, if you were an investor in Bank of America last year, chances are you might have gotten hurt, as many were. What's been the key to profiting and timing this stock?
Well, again, when it breaks levels, get out of the way. And Bank of America was one of the financials that broke every level in the last few years. And then finally, coming into this year, as a market timer, you're like, you know what? It's been battered and bruised. Maybe it's a good Santa Claus type rally trade. Maybe it's a good January effect. It turned into a little bit more than that. If you look at Bank of America on the chart, you will see, that actually go to the weekly chart to see some things you could have seen before it broke down. And that was right. I think the last price you could have got out of was right around here when it broke this major support. This was, I think, right around like 13. Besides, obviously, if you go over here, when it broke back in the real debacle days with this wide range bar, then you had your little bear flag, and then it broke below. So anyway, with all that said, you come into this year, you go back to your daily chart, and you'll see that this is when I got somewhat excited when you looked at this like downtrend that got broken with a nice wide range bar matched with the flag. So this was your buy entry, okay, around 6. And then it had a nice move to 8. And then even if you missed that move, okay, you missed it, you said, I'm not trusting the banks, I don't think they're any good, blah, blah, blah. And then you saw this tight pattern. We talked about this many times, said, you know what, it's going sideways, it's not pulling in, it's absorbing this big move. You could be a buyer here above 815. And then above 815, 820, had another nice move to $10. And now at this particular point, it's trying to consolidate again. So if this market could stay strong, which it looks like it is, and it continues to go sideways, the next buy area would be through this 1010 for a move probably to 1213 this year. But obviously, as this move gets more intense and keeps going to the upside, you just have to be a bit more careful. But again, if you got out well when you saw the weakness in the financials because they've lagged for the last few years, you could have got back in this year with a plan and made yourself 30 to 40%.
And Bank of America, of course, is one of the riskier stocks in the financials. But what's been the difference in how market timers have been able to profit from a stock like JP Morgan, which has led the financials?
Well, JP Morgan has been the class of the whole group, and everyone's been saying follow that. That's been a leader. You too, that one also, you had some clues to get out, but this one, just as far as I'm looking at it for leadership, because every time it makes new move highs, the banks follow. This is when this broke this mini little downtrend, okay, coming into the end of the year. That was your buy entry. And then if you guys remember, you had another clue right here if you were on the lookout, but you have to be on the lookout and have to be ready for it. This is when I think Warren Buffett said he put this in his personal account, his PA, meaning that he likes it. Warren Buffett likes it, you take notice. And then had another nice move, another wide range bar, through this 41, and now made new move highs. So as an investor, you're getting rewarded. As a trader, there's been many opportunities, and I do still think it has higher prices, but again, we're going to watch to see what type of reversal could take place going into the end of the quarter to see if the banks need a rest. So just don't chase the excitement, just approach it with a plan.
And really quickly, Microsoft, of course, has put investors to sleep for 2 years. Is this stock no longer boring?
Actually, for a decade. This was like one of the go-go stocks way back when I think I was, really young in the business. And, it went through a 10-year consolidation phase. Okay, and that's absorbing a huge mega cap, so many shares outstanding, and obviously a lot of competition. But this year, it triggered. So if you use technical analysis this year, not just sat and hold, because if you sat with it, you definitely would have been upset. But if you timed it or added to it, look at Microsoft. If you could see right here, this was that mini downtrend that it broke to put it back in motion. I think this is when I started talking about it on Bloomberg, that I could see 32 to 34, and that's where it went. And it's been nice and methodical, but if you look at the monthly chart, you'll see there was a rationale for it. I'll actually go to the weekly. You could see since 2010 it was a major downtrend. Okay, so this is more of a bigger picture trend that it broke. So then there you go. And then if you go now to the monthly to see the actual 10-year range, okay, this is when it broke above. Now it actually showed power going through this point of reference. So now I think with a little consolidation, it could see at least 36 to 38 this year. But again, it's not going to move so fast. So you want to more buy the dips in a Microsoft than chase excitement. All
right, well, let's touch on some stocks just really quickly. LVS shares higher yesterday. Brian Murray set a new price target for the stock at $64, maintain its buy rating. Will we see the stock hit a new yearly high this week?
This week, maybe. It's been a good buy on dips. It's been a good chart trader. I think this year it goes to 63 to 65. I'm just not sure if it makes a new high this year. I am long LVS.
All right, and LinkedIn, as the Facebook IPO approaches, all eyes are on social media stocks, and shares of LinkedIn have rallied 58% over the past 3 months. So what's your strategy?
I'm long LinkedIn. I've actually been adding tiers in based on the chart pattern. I still think it gets to at least 110, and I do like Goldman Sachs' target of 130 at some point this year.
And oil stocks remain hot. Exxon's among the integrated oil companies near 52-week highs. So does it still have room to run, or is it ready for a pullback?
This one I want to show you the pattern because I think it's tight, and I think it's something for a macro investor as well if you're not already in there. Look at the size of this base or this upper channel in XOM. It's been going sideways now almost since December because obviously the oil sector itself has been lagging a bit. So after a really nice move from this lower area, it's been consolidating, profit takers coming in, new people buying it. It woke you up yesterday. This would have been your day one buy as a momentum trader, and then once it clears this high here, and that is 87, 83, I think you will be seeing some headlines that ExxonMobil at new year highs. So I would stay with this one.
And Tesla among the big gainers yesterday, adding 9.7%. So should investors take some profits here?
I think that this momentum name has a bit more. I don't really understand it. I haven't traded it, but I know there's a huge short interest in the stock. Some guys always are talking about it. If you look here at the chart, you'll see that it had a beautiful move yesterday. Okay, this is the type of move you look for when it clears a major flag type area. So at this point, I think you can't really chase it, but as momentum traders come in, it could see another day if it does trade through the high here of 38.09, because you will be squeezed once again. But don't chase this if you're a little risk averse, because this one definitely is a tough one to handle.
All right, and you're still long TBT. Is the trend still intact to go higher?
It is, but it's a little shaky. I got involved, 2 weeks ago when it broke above 1970, was able to sell some strength into my target, and then I bought back, I believe, on Friday. Right now, if you look at it, it still looks okay. It's still pretty methodical. Here was that channel, okay, that it broke above. So when people started saying the bonds are going to sell off, rates are going to go up, it looked really good right here. This was my first buy, or actually, no, my buy number 2. Did sell some into here and held it, and then I bought some back. I don't like yesterday's reversal, in it from strong to negative, but my stop on the TBT is going to be 20.06. As long as it stays above 20.06, I will stay with this trade. If it goes below it, it's going to show that there wasn't much power behind this overall thesis.
All right, and in closing, Scott, what's your theme for trading the markets today?
For today, I would say don't chase excitement, as far as the rally that we've had. Typically after a strong day like we had yesterday, you see a little bit of downside probing, maybe 4 to 7 handles, or if we go, if we go positive, maybe 4 to 7 handles on the upside. So the indices could digest yesterday's gains when you could actually trade relative strength and relative weakness. And now as far as today's morning call, I know I showed you a lot of past performance, and the only reason why I'm doing so is because I still, on the Twitter sphere, all in the media, people don't want to be positive on the market. And I know people have been battered and bruised and burned, but that was then, this is now. I do think the market's acting much better. I do think in the next 3 years, we're going to see higher prices. So if you want to have the cobwebs or the footsteps of the market that hurt you in the past because maybe you used a broker you didn't like, or you chased excitement, or you looked at parabolic moves and you went in it too late, or you went on margin and you got stopped out at the end of the move and then it rallied, change. Change is good. If you could change and you could grow, you could then, get rid of the past performance and you could start making money with the market, because I do think we're going to be at S&P 1700 in the next few years. So I know you might have missed out up to this point. Don't miss out on the next, particular move. Learn how to trade it like a pro.
All right. Spoken like a true pro. Thanks so much, Scott. Happy trading, everyone. Have a great day.